Okay, now that we got that out of the way, today we want to talk about position sizing. It's an important subject. Position sizing. It's going to make you a successful trader, or it's going to make you to donate monies to brokers every time. There is a reason why 95% of Forex traders or any traders fail in the markets. One of the reasons is not understanding how to size your trades. You must be able to size your trades relative to your account size. If your account is so small and you are taking multiple standard lots, or you are taking these huge lots, my friend, you are playing with fire. Yes, you might win 5 trades, but watch out for the 6th one. It might take you out. It might take you out. So how do you stay in the game and not lose your money? You want to be able to protect your deposit. At least protect your account so that you can continue trading. If you take these huge lot sizes, one loss, or maybe two, they're going to wipe out your account. But if you are a person who is managing their risk by the size of the trades that they are taking, even if you lose 3 trades in a row, your account is still safe. You can still continue what? Trading. So you must understand lot sizing. It's a key to successful trading. So let's dig into how to size your trades, how to size your positions. Basically, there's no way I'll be able to understand or to know your account size. People who are watching these videos, my videos on this channel, some of them have got accounts that are greater than $1,000. Some have got accounts that are bigger than $100,000, $50,000. Some have accounts that are around $200, $300, $50, $100. Or maybe even like me, you start at $5. Yes, I usually start at $5. Allow me to digress. My choice of depositing the minimum my broker can take, $5 and $10, is usually because I'm testing strategies. So what I usually do is I deposit my $10, my $5, and I grow that account to around 100, 200, 500, 800. I withdraw it. Then I start all over again. So if you are depositing $1,000 in your account, if you're depositing $20,000, if you're depositing $500 into your account, and you are able to deposit 100,000, that's still fine. It's still fine. I just find that it's funny that people tend to judge people who deposit $5 and $10, but in the end, It's not the size of the account. It's what you make of it. If I'm able to turn $5 into $800 and you are able to lose $1,000, who is the winner here? Just think about it. So don't judge a person or a trader by how much they are able to do to deposit into their account. Judge people on their ability, how they are able to grow their account. Now getting back to the business of the day. So lot sizing is important. It's going to make you or break you. Lot sizing. You are either going to become a profitable, successful trader, or you're going to be blowing accounts because you don't understand lot sizing. There are many apps out there. You can go on to your Google Play, your App Store, or wherever. There are many apps. There are many apps that can help you do the math relative to your account size and tell you what position sizes you should be taking. You can go online. There are also position size calculators. So yeah, if you want the exact numbers and stuff, the scientific numbers, I think maybe get the apps, go online and get the tools. This video though is a guide on safe position sizing relative to certain sizes of accounts. So I hope this video helps you. If it doesn't, if you don't find anything here, I'm sorry. You can skip and go to the next video. But if you find the information that I'm about to share helpful, I'm happy because I taught you something and I contributed something to your trading. Sorry about that. Got interrupted to attend to something, but anyway. So yeah, let's delve into lot sizing. I was saying it's going to make you or break you. You are going to win or you're going to lose partly because of the size of trades that you are taking. If you have a small account, rather stay away from taking standard lots. If you have a bigger account, well, you can afford to lose on standard lots. So yeah, you decide on what size of account you have. So here I have a couple of accounts, size of accounts that I think is a good guide on what you should be doing. I'll start with the bottom ones. That's my category. The $5, $10, $15. So if your account size is $5, my broker allows for a minimum deposit of $5. Or your account size it is $10 or $15. The lot sizes you should be taking on your trades, you should be taking 0.01 per trade. You should be taking 0.01 per trade. That should ensure that you are safe. When you lose, you don't lose your account. When you win, you still gain something. Of course, you are not going to flip or triple your account overnight, unless you take 100 0.01s. There's an advantage in that, which I'll explain. So you are trading an account that's below $15. Stay at 0.01 per trade. How many trades that you're going to take, I'll leave it up to you. It depends on your level of trading. If you're a beginner, be cautious. If you know what you're doing, you can take 10 or 20 or 30 or 50 0.01s. What's the advantage in those ones? Unlike rather than just taking 0.50, for example, or 0.30. What's the advantage in taking multiple 0.01? What I noticed is at 0.01, usually when you are wrong and you are in drawdown, sometimes drawdown takes days. The market will do what the market wants. So sometimes you're in drawdown and your stop loss has not been hit. And if you are going to be in drawdown and you have taken 0.050, immediately, depending on the pair, when the clock strikes next day, the broker is going to charge you swap. Swap is charged on certain pairs or is given on certain pairs. There are certain pairs where the broker will pay you swap for holding your positions overnight. Then there are certain pairs where the broker is going to charge you swap for holding your positions overnight. But what I noticed with 0.01 lot size is the swap is so minuscule. It's so small that the broker, you won't even see it. You have to hold those trades for months before the broker will start charging a reasonable swap. So the advantage of taking 0.01 lot sizing, 0.01 per trade, even if you take 100 of them, is if those pairs are charged, if on those pairs you are supposed to pay swap, you are not going to pay any. That's what I noticed trading. So 0.01 is powerful. Don't look down on people trading 0.01 lot sizes. You don't have to take one trade. You can take one trade, but you can make 10 0.01s on an account size that's $15 and below. Then the other trick that I use is I deposit my $5 this week. I trade 0.01. I make profit, and on that profit I wait for next week. When next week comes, I increase my lot sizing to 0.02. Now basically I'm trading with the profit that I made the previous week. You get the sense? I'm not trading my money. Yes, the profit is my money, but increasing the lot sizing is only trading the profit that I made. So what I do is this week I stick to 0.01, and if I'm profitable this week, I increase my lot sizing to 0.02 the next week. In case I lose, I know I'm losing the profit. So that gives you a sense of how I trade. So from $15, I say I grow it to around $25. The lot size that you need per position is 0.03. If your account is $25 and below, but not less than $15, you can trade 0.03 per trade. 0.03 per trade. Now you can start expecting to pay swap. Now you can start expecting to get paid swap or pay swap. Then if your account size is greater than $25 but it's less than $40, you should be taking 0.04 per trade. Your lot sizing should be 0.04 per trade. You can take several 0.04s. Again, I said it depends on how good you are, or if you've been making profit, or if your strategy is good. But if it's bad and you're losing money, I'd rather stick with 0.01. Sorry guys, where I am, seems there is a lot of activity today. It just seems today there's a lot of noise. But anyhow, I want to share some these nuggets with you. Then if your account is $40 but less than $50, you can use position size 0.05 per trade. So every trade that you're going to be making when your account is between $40 and $50 is 0.05. That's how you keep safe. That's how you keep on trading. That's how you don't blow your account. If your account balance is between $50 and $100, between $50 and $100, you can trade with 0.07 per trade, 0.07 lot size. The goal is to, when you lose, not blow your account, but when you win, you keep on growing that account. Forex is not a get rich quick scheme. If you treat it like a gambling machine, like a casino, you get bent. So this is how you stay safe for the long run. For the long run. Then when your account is, you've been trading and your account is now greater than $100, but it's still less than $150, I advise that you use lot size 0.10. You are taking 0.10 per trade. I don't know how many trades you would want to take. It depends on your level of trading. Again, if you're struggling even with a $150 account, stick to 0.01. There is no shame in it. Why lose your money? You must protect your account so that tomorrow you can come back and trade again. So if your account now is above 150 but less than $200, your account now has grown to $150 and is less than $200, you can trade using 0.12. per trade. So you are risking 0.12 per trade. Again, if you're struggling, stick to 0.01. Your account grows to above $200, but is less than $300. To be safe, stick to 0.15. 0.15. When your account is above 200 but less than $300, so stick to 0.15 lot size. Go down to 0.01 if you are not sure of what you're doing. Leave to fight another day. Then if your account is above $300 but less than $450, then you can use 0.20. Your lot sizing can be 0.20. Don't be tempted to start taking standard lots unless you know what you're doing. So your account is greater than $300 and less than 450, and you want to be safe. Rather take 0.20 per position. I don't care how many positions you take, you decide on your own. But make sure you are not taking enough positions to blow your account. Then we go to when your account is above $450 but less than $600. You can take 0.25 per position. Your lot sizing is 0.25 per position for an account that's above $450 but less than $600. When you get to $1,000, if you want to play it safe, I would say rather take 0.50. It ensures a good enough profit and you are not risking all your account. That's playing it safe. But if you know what you are doing, if you are at $100, you can start taking standard lots. That's 1.00. That is when you know what you are doing. So my recommendation to new traders, if you don't want to lose your money and you don't want headaches and you don't want to marry your charts, rather play it safe. 0.01, 0.05, 0.10 at most. That will be your maximum. Sometimes people trade news. If you're going to be trading the news and testing stuff, so 0.10 is fine. Don't be tempted to take standard loss. You destroy your account. So hopefully you learned something today. If you did, leave a like, leave a comment, and share the video. I enjoy hearing what you think. If this video didn't help you, that's sad. But still leave a comment, leave a like, and share the video with your friends. Hopefully it helps someone. The goal with position sizing is so that you fight another day. You don't want to place 2 trades and your account gets blown. You place 5 trades, your account is gone. You don't want to do that. So you have to mind your position sizing, mind your lot sizing. Hoping you learned something today, and until next time, bye.